Every morning for decades, a handful of bankers picked up the phone and decided what gold was worth. Not the market, not supply and demand them, and when prices threatened to rise, threatening to expose the fragility of paper money, they had a mechanism to push it back down. This is the documented, court-proven story of how the most powerful financial institutions on Earth rigged the price of gold.
Black Ledger investigates the gold suppression machine, from secret central bank agreements to billion-dollar settlements paid by the world's biggest banks.
In 1944, at Bretton Woods, New Hampshire, the world's financial order was rewritten. The U.S. dollar became the global reserve currency, and every dollar was backed by gold at a fixed rate of $35 per ounce. America held two-thirds of the world's gold reserves, but by the late 1950s, that gold was flowing out. Europeans were redeeming dollars for the real thing, and Washington was terrified.
In October 1961, the United States secretly convened a meeting with 7 allied central banks. The mission: hold gold at $35 per ounce at all costs. They pooled their reserves and agreed to sell into the market whenever prices rose. Britain, Germany, France, Italy, Belgium, the Netherlands, Switzerland, all coordinating to suppress the one price signal that would expose how much paper money had been printed. The London Gold Pool was operational.
For 6 years it worked. Then in 1967, France, under de Gaulle, withdrew. The general had grown suspicious that America was abusing its dollar privilege, printing money to fund Vietnam while allies held the bag. He began converting French dollar reserves into gold. The run accelerated in March 1968. Over a single week, speculators and central banks withdrew $3.5 billion in gold. On March 15th, the pool collapsed.
Even after the pool's collapse, the structure of control remained. Every trading day since 1919, 5 bullion banks had conducted the London Gold Fix, a private telephone conference where they simply declared the official price. NM Rothschild, HSBC, Deutsche Bank, Scotiabank, Société Générale. This system, opaque and unregulated, persisted for nearly a century. When it finally came under regulatory scrutiny in 2014, what investigators found was extraordinary.
In April 2016, Deutsche Bank settled a landmark lawsuit for $60 million, admitting participation in a conspiracy to fix gold prices. The more explosive detail was this: as part of the settlement, Deutsche Bank agreed to hand over evidence, chat logs, emails, trading records implicating other major banks. Traders openly discussed coordinated price moves. One message read, "Let's get the London fix and make some money." The cartel had left a paper trail.
The fines followed in 2014. Britain's Financial Conduct Authority fined Barclays £26 million after a trader suppressed gold prices to avoid paying out a client's options contract. In 2020, JPMorgan Chase paid $920 million for spoofing precious metals markets over 8 years. Scotiabank paid $127 million in 2021. Each case carried one consistent finding: this was not rogue behavior. It was institutional, systematic, and profitable.
The London Gold Pool, the fix manipulation, the billion-dollar settlements, they form a continuous line across 60 years. Gold's price has been actively managed by institutions that profit from cheap gold and expensive paper. If this documented history changes how you see financial markets, subscribe to Black Ledger. New investigations every week.